Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 3rd of August, starting off with the Ftse 100 as usual, where we've got the market just bouncing off the 200-day moving average. That's around 73.70 at the moment. So while we're above that on an end-of-day close basis, we can retrace the recent peak near 74.80 and then hopefully post February resistance up to the 76.50 zone, which I suppose at this point we're looking for by the end of this month. If it didn't happen by the end of this month, it's probably not going to happen. The other point to note is that looking closely, we can see that we've got the 50-day moving average there actually sort of flat now. It's starting to rise, but it's gone flat again. But if it starts to rise, we could be in the run up to a golden cross, which really would or could get this market heading higher in a meaningful way. Otherwise, you could really say that we're just in a range between 7,000 and 76.50. RSI around the 60 level, so that's okay. An end of day close back below the 50-day line would not be appreciated. That's around 72 or 7,300 actually. But while we're above the 200-day line and that's rising, that's a nice setup, bouncing off a rising 200-day line. Normally quite a good thing. We've seen that late back in May, but obviously we did fall back after that. But normally a reasonable thing in terms of the technicals. Moving along to Bitcoin, where the struggle continues or has continued for quite some time, neither here nor there in terms of where we are in the recent range around 19,000 up to the 24,000 area. We've got the market above the 50-day moving average, which is some consolation. Let's call that 21,400. And actually that 50-day line starting to rise, which is probably the best news for this market in a long time. A rising 50-day line near the lows tends to mark a low, or tends to mark a turnaround point for a market. So let's see if that signal works now. The fact that we've had recent support well above that 50-day line also is a plus. And I think we can be not only looking now towards 25,400, the old May support, but actually back towards 30,000. So punchy call there, but we've broken that line of resistance there from April. We've got a rising 50-day line as well. That should at least give us an intermediate rally, even if it's not the big one that some people are looking for. On to a stock which has behaved almost as badly as we've seen with Bitcoin over the recent past. Down from a double top, bull trap double top that we had through £22 and down almost continuously since then. A couple of points to note here. One is an uptrend line there from late 2020, and we've in theory bounced off that. Well, so far we've bounced off that in the £6 area. We've also got a broken RSI line, which I tweeted out yesterday. That might provide some help for this market over the near term, but really the best on the upside at the moment is old support near 850. And we'd like this market to hold above the £6 level while it consolidates. But with that trend line break there in the RSI window, we would rightfully expect a bit of reaction to the upside, and certainly not the rather muted response that we've seen so far today. Moving along to one of the heroes of the recent past in terms of the charting and everything else. So here we've got Cellular Goods. I think I was looking for that line to be hit there, which was around the 3.2 pence level. So far today, I think we've been up to 3.05, but nobody's perfect, I suppose, in terms of these things. But the call made, I think, when the shares were around 1.3, 1.4, so quite a result, and obviously much quicker than we were expecting. In terms of what might happen next, we've got the old resistance on the way down around 2.1 pence, so ideally, while we stay above 2.1, we could have the retest of the 3 pence plus area. Best case scenario, the target at the moment up to the 200-day moving average at 4.4 pence, maybe by the end of next month, but we really need to hold 2.1 pence ahead of that. It's normally good when we see a stock or a market overshoot a target, and in this case, that's what's happened with Igas. So we were looking for the top of that channel there from this time last year to be hit around 45 pence. That's been done today. Well, it was done on the close yesterday, and looking for a new leg up now, maybe up to 60 pence, which is derived, if I can show you the trend line there. It's derived from a resistance line projection from the summer of 2020. and 60 pence maybe over the next couple of weeks while we hold above 40 pence on Igas. But it has to be admitted, actually, this looks like the type of move here which is more than just up to 60 pence, but possibly much higher. But going for 60 pence first on Igas. Going on to another stock, which I suppose it was a bit of a read across from Cellular Goods, and we had a little flurry higher in Kanabo. Big thing to happen here, but what we need to see is an end of day close above the 50-day moving average at 3.25. If we can get that, then we would be rightfully looking towards the top of a broadening triangle from May as high as 5 pence, and that could happen as soon as the end of this month. Stop loss just below 2.75, which has been logically that's the obvious place to have it. There has been recent support for the shares. Moving along to Mode, which has done better than Bitcoin in recovering over the recent past. I think it's up 50% over recent days. Highlighted before the break of that falling wedge, that was around the 5.25 pence area. We were looking for the 50-day moving average to be a hit initially. That's around 7 pence, and above the 50-day line, maybe we can get back to 8 pence over the next couple of weeks, which was resistance on the way down. The idea that there could be a decent move here came from the way that there's been bullish divergence in the RSI window since the beginning of last month, so with lower lows but a higher RSI trace, and that bullish divergence can be, well, it normally is the best indicator of a strong move rather than just a minor move or a break higher and then a reversal. Moving on to another stock, which is trying to copy Mode at the moment, Microsaic, broken out of that falling wedge, which has been in place since the beginning of the year. And just trying to draw that line a bit more accurately there. So basically, the break of 0.06 gave us the break here. Initial target clearly around 0.1, but we could get up to 0.12 by the end of the next month, given the way that we've been imprisoned in the falling wedge for such a long time, and there should be some decent momentum for the stock. If you're looking for a stop loss now, maybe the 50-day moving average at 0.07 could be one on a mid-close basis, but either way, 0.1 and 0.12 on the cards while we hold above the 50-day line for Microsaic. Moving on to Ncondezi, which has been trying to rehabilitate itself. The problem is that every time it rallies, it seems to find a few sellers. Hopefully now, though, with the latest support above the 50 and 200-day moving averages around 0.9, we've actually turned the corner, and that would suggest that we could head up to retest recent resistance around 1.8 pence, maybe as soon as the end of next month. But it looks like a reasonable risk-reward situation here with the 0.9 and then 1.8 as the target by the end of the month. Green hydrogen news today from Oracle Power. So worth looking at the chart here. We've gapped up through the 50-day moving average. We've been looking for 0.4 pence for quite some time. This may be the time that it happens, and that is valid at, while we hold above 0.28 pence, and 0.4 pence maybe by the end of this month for Oracle. Stock that I haven't covered for quite a long time is Plexus, and here we're back on the basis that there's been bullish divergence in the RSI window. There's also just about been a trendline break. If you draw the trend line there from the beginning of the year, like that, not quite as accurate as maybe I would want, but you get the picture there. So a break of that trend line there today around the 2.5 pence level. Above that, we're looking for initially the 50-day moving average at 3.25, and probably resistance on the way down at 5 pence by the end of next month, if this is indeed the turning point. But I think the 50-day line should be achieved over the near term, given the bullish divergence and that trend line break. Just a couple of stocks to go now, also relatively obscure. First one is Phoenix Global Resources, which maybe on a better day for the market wouldn't be here, but we do have a situation where this looks like a reasonable turnaround. We had a golden cross between the 50 and 200-day moving averages at the beginning of last month, and that's worked, and the view now is that while we're above 6.4 pence, we can head up to 10 pence by the end of next month on a charting basis, and I think that looks like a reasonable setup, although obviously this is not the most liquid situation in town. Finishing off with Touchstone, which is a favourite for some, I think. Used to be quite a followed situation, but here we've got a bit of bullish divergence there, or at least an uptrend line in the RSI window. We've broken above neckline resistance around the 60 pence level. The longer we stay above 60, we could at least get up to the 50-day moving average area at 71 over the next couple of weeks or so. That's it for me today. More updates tomorrow.